So if the question would be, when are our institutions coming? And when are institutions coming? The answer is yes, they are coming. Yes, I do believe some of them are already secretly buying.
Even if we look at the tokenization of financial instruments, as we've seen through KKR and maybe real estate, et cetera, all of that is just the tip of the iceberg to what's coming.
Alrighty, what is going on, everybody? Welcome back to another CYPRX tracking video breakdown. In today's video breakdown, we're going to be going over some Hbar price action, looking at where price could go over the next couple of days as we head into the weekend. And then I'm going to be reading some fundamental pieces for you guys, showing you all evidence that the retail crowd is manipulated by mainstream media, giving you guys some insight perspectives from reputable individuals behind the scenes, letting you guys know that it's not retail that's driving this market right now. And then we're going to just be covering some fundamentals surrounding Hbar to finish off the video breakdown. So if you all enjoy these videos and they're providing value for you guys, do us a favor, smash that thumbs up button and subscribe, especially if you're an Hbar holder and you've been paying attention to our callouts. So 2 days ago is when we particularly put this video breakdown out for you guys, where we called out a resurgence in Hbar's price action to make its way back to the 12-cent psychological level, as long as we held above the 9-cent region. Hbar has been the most difficult pair so far, with neither of the scenarios playing out, give or take scenario number 1 possibly playing out, or scenario number 3 possibly playing out as we stand with current price action. Looking at the charts, you can see that we did see a slight retracement down from roughly around the 11-cent range, but we are holding firmly above the 9-cent range. So today, what we're going to be looking for on Hbar particularly is for us to hold above the 9-cent psychological level and for us to traverse back to the upside, breaking 11 cents and heading towards that 12 to 13-cent range. With that being said, if any of you guys grabbed that call out or you saw us make that live, do us a favor, smash that thumbs up button and subscribe. We do appreciate the love and the support. Like I mentioned to you guys, we're going to be doing these price action breakdowns, showing you all the accuracy of these updated delta zones that we give to our private CYPRX communities well in advance before the moves play out. So make sure that you are following us so that way you don't miss a beat on any further video breakdowns and price analytics, particularly focusing our attention today on Hbar. But we also had some AGIX callouts come into fruition and ICP, which we also covered in those previous video breakdowns. To go reference those callouts, just go back and look at this previous video breakdown and the update that we gave just a couple of hours ago. So with that being said, looking at some price updates on Hbar, you can see even on the XSpace putting this analysis out to you guys, where we were mentioning scenario number 3 would be if price action can hold above the 0.9-cent psychological level, physically drawing out step by step what we would want to see at our specific delta zones. Remember, we have a whole entire course structure in the CYPRX private community delta zone membership section that gives you step by step what we want to see in the form of fundamental PDFs and technical PDFs around the delta zones, how we want price to react before we get involved in price action. And you can see these delta zone setups is exactly what we saw on Hbar's price action, which is exactly what we were attempting to give you guys via the chart analytics. So we saw that dip down into the bottom of the delta zone, i.e. delta manipulation. Buyers pick back up, holding above the 9-cent psychological level, and buyers showing interest, breaking back above 10.5 cents and continuing back to target these relevant highs. Looking at what could potentially take place on Hbar in the short term as we head into the weekend, there's going to be 2 scenarios that we're going to talk about today. Scenario number 1 would be if we reverse back to the upside via a slight pullback, give or take, to move back up into the high 12-cent range. Scenario number 2 would be if we cannot break above 12 cents, we start to reverse back down into 10 cents. We will be monitoring price action around this psychological level. If we break below 10 cents, we'd be looking for moves down into the low 9s to potentially high 8s to revisit this previous demand range down here where we had this expansion move to the upside into roughly around 11.5 cents. Scenario number 3, to end this technical analysis breakdown, would be if we see a slight retracement down into 10 cents, we hold above the previous demand range, above that 9-cent psychological level, we accumulate more orders, and we reverse back to the upside from here, looking at, again, those targets of around the high 12s to potentially 13 cents on Hbar. So in a nutshell, that is Hbar's price action. Now, what I find interesting is that tomorrow, we have Binance set to add Hbar TRY as a new trading pair on February 23rd. Time of recording this video breakdown is around 10:30 a.m. Pacific, 2024, February 22nd. So let's see if this has any upward trajectory or momentum behind it. If we can see this listing on this particular trading pair and we see Hbar move higher, that would be phenomenal to see. But here you can see it just mentions that Hbar stands out from other blockchain technologies due to its use of hash graph consensus, which I have a firm belief is going to be absolutely monumental in the next bull market cycle. Now, this fundamental breakdown is insane to see because in my personal belief, this is retail manipulation at its finest. Leading articles getting you to try and think that this whole entire pump that we've most recently seen in Bitcoin has been driven by retail. That is completely false. Retail does not have enough freaking money to move these markets. I'm sorry, but they just don't. Can they be involved in pumping up these markets? Absolutely. But primarily driven by retail? Absolutely not. We do not have enough money to fuel these markets. We do not have enough money to move them. It has been driven by institutional investors behind the scenes that are not making their trades public, that are not making their involvement public. I almost guarantee it. So we're going to read this fundamental piece, and then I'm going to show you some insights from some individuals that have the same exact perspective as me, but have a lot more credentials than I have. So here it says the recent surge in crypto prices appears to be fueled by individual traders making impulsive decisions rather than being driven by institutional investors or market fundamentals, according to JP Morgan. Do you remember what Jamie Dimon said of JP Morgan just the other day?
Deeply opposed to crypto, Bitcoin, etc. You pointed out the only true use case for it is criminals, drug traffickers, anti-money laundering, tax avoidance, and that is a use case.
Government, can you give us more clarity on that?
Yeah, what I was also pointing out is that the actual use cases are sex trafficking, tax avoidance, anti-money laundering, terrorism financing. It's not people just buying and selling Bitcoin.
It's not people just buying and selling Bitcoin.
Another thing I forgot to point out is that, remember, the fundamental piece that we just read that says that retail traders are driving demand in Bitcoin transactions right now is what's been fueling the market. But the CEO of JP Morgan, Jamie Dimon, just said that it's not people buying and selling Bitcoin. You guys see, the devil's in the details. You got to be able to pick up on this stuff, right? And you remember this reputable individual, i.e. a highly reputable individual in Algo, saying that Jamie Dimon is a liar.
Yeah, I mean, they are all looking at it. And somebody mentioned earlier, JP Morgan is really, despite what the CEO of JP Morgan says, JP Morgan is making a lot of strides.
And then just to confirm that they are interested, i.e. JP Morgan, in digital assets, here's a reputable individual from JP Morgan solidifying that they are for a fact interested in crypto and that you should be as well.
We at JP Morgan obviously are a meaningful player in this space, and we think that the whole crypto DLT technology is very exciting, and that is something that one should take very seriously. So
again, this is all just bullcrap in my personal opinion. Here is a reputable individual confirming that the recent moves in the digital asset space have been driven by institutional interests, that institutions are interested in this technology, and that they are most likely the key drivers behind this recent price action.
We now saw Bitcoin surging from $25,000 to more than $40,000 in the last couple of weeks. Who do you think has driven this development?
Yeah, I think it's been mainly driven by the faster moving traditional investors now. So I don't think that there is a big in the uptick from 15 or from 17 to the place where we're standing right now. It was not the usual retail investor, because the interested retail investor has been flowing into the system in the last two bull cycles, and the next big flow of retail money in the system will probably come when big banks will be announcing their integrations. So if the question would be, when are are institutions coming? And when are institutions coming? The answer is yes, they are coming. Yes, I do believe some of them are already secretly buying.
Now that that's out of the way, and you guys can see that paying attention to FUD articles like this to keep individuals out of the market, in my personal opinion, saying that the recent pump has been driven by retail traders is absolutely bullcrap. This article and articles like this should get taken down, and real analytics and real research should be done on this. Don't just take for granted what these fundamental pieces are saying to you guys. Make sure that you're watching these panel discussions that we display on the CYPRX YouTube platform, so that way you guys have a better understanding of what's actually driving sentiment and market demand. Now, I'm going to end this video clip with some video breakdowns from Mance Harmon and Lehman Beard, hopefully giving you guys some insightful perspectives as to where they think this market is headed, how they think that we're in the early stages, and hear them compare the boom and bust cycle that we are currently experiencing in the cryptocurrency asset class to the early days of the internet, which just goes to show that, in my personal opinion, right now, Hbar price action, give or take some slight pullbacks, maybe some potential retracements down to recent lows here in this area of 7 to 5 cents. Here at CYPRX will obviously, of course, be taking advantage of those buying opportunities if we get them, but prices of digital assets like Hbar, in our personal opinion here at CYPRX, are still extremely undervalued compared to where they are going to go in the near future. Not financial advice, but again, there's going to be an onset of individuals in the future, i.e. 3, 4, 5 years from now, that are looking back and saying, I was in on Hbar at 4 cents. I was in on Hbar at 7 cents, at 10 cents, at 11 cents, well below $1. Because in my personal opinion, Hbar's potential to reach $1 plus is extremely inevitable. It's just a matter of time. When real utility kicks in and mass adoption kicks in, those prices, in my personal opinion, will come into fruition. Again, this is not some short-term get-rich-quick scheme. Hbar for me is a long-term investment. When mass adoption kicks in, user adoption kicks in on a global scale, and we see real utility kick in. Many blessings to you guys. Listen to what these gentlemen have to say, i.e. Mance Harmon and Lehman Beard, and I'll leave you guys with that. Do us a favor, smash that thumbs up button and subscribe to the platform. We do appreciate the love and the support. Next week, we will continue with further video breakdowns going over price analytics and charts on Hbar, ICP, and AGIX. So make sure that you guys are following us for more. As always, I will see you guys in the next video breakdown. Take a second and listen to these gentlemen speak.
Decentralized applications to realize that overarching vision. That vision is going to be realized in every sector of the industry. I mean, what you hear about a lot is the finance sector, but it's much broader than that. It's going to be in finance, it's going to be in real estate, it's going to be in supply chain use cases, and et cetera, et cetera. Every part of the internet, every sector of society is going to be affected by this technology and this model in this new version of the internet that's being created. And Hedera is one of those players.
If we have an industry that is very powerful and the world hasn't yet seen everything it's doing, the only way to reach the other 99% of the world is for it to be easy to use, easy to develop on, smooth experiences for the developers. And so we put a lot of effort into that, into making this easy to switch to it, making this easy to switch to it, easy to learn it, easy to build things. And this is critical. It has to be easy. Even things like if you lose your keys, how do you get them back? And you and I will talk about that later. But even that is making this easier for the mainstream to use. That's very important. Also, as we have scaled up, we've had to start looking at how do you manage huge amounts of data. Because, of course, if you're immutably storing everything forever and you have 1,000 transactions a second or tens of thousands or whatever, you have to be storing that and then be able to access it quickly and all of that. And so there's a lot of infrastructure that is being built right now to handle all this usage that is coming, all this usage that is coming, all this usage that is coming.
I think it's clear at this point that we're going to live in a tokenized world. Everything you see and touch, everything of value is going to have a digital twin. And the way I think that that's going to scale up is through supply chain. So we have a user of Hedera called Atma.io. It's Avery Dennison. It's a global company. They're a supply chain company. And they are processing billions and billions of transactions on Hedera today, where their supply chain customers have product flowing into their supply chain. That product is tokenized. As the, say, sneakers, as an example, get produced, the sneakers end up having a token associated with them. Those tokens can interface through the decentralized finance tech stack, meaning that the tokens associated with the sneakers can be traded for stable coins in a programmatic way to fund the capital, to provide funding for operations. As the sneakers get ready to ship, the pallets of sneakers have tokens that are traded again for an AR, an accounts receivable, from the distributor that is buying those pallets of sneakers. The ARs programmatically get factored again through the DeFi tech stack, and in return, they get more stable coins to, again, increase free cash flow. That's what the future is going to look like. And because of that, everything that you see and touch is going to have an associated token. What we've seen so far is just the tip of the iceberg. Even if we forget about pictures, right? Forget about apes. Even if we look at the tokenization of financial instruments, as we've seen through KKR and maybe real estate, et cetera, all of that is just the tip of the iceberg to what's coming.